Good morning, welcome to the Australian Early Finance Briefing for Friday the 20th of November. My name's Nick here in Melbourne. Starting with Bitcoin, it's back with a vengeance, trading up near levels last seen at that big spike in 2017, early 2018. In fact, in the last month, it's up over 50%. And a lot of sort of pundits in the Bitcoin market are saying this time it's different. Last time it was a lot of speculation and particularly young males at home trading. This time around, it's much different. So according to Carolyn Bowler, who spoke to The Age, she's the founder of BTC Markets, a Melbourne-based platform for trading Bitcoin. She said that traditionally it was these young males. This time around, it's not. We're actually seeing a lot of older people. So people with self-managed super funds, that's quite a common thing. And just older people and women also getting on board. In addition to this, Deutsche Bank has issued a note saying that they're seeing Bitcoin now seen as like an alternate to gold. So, in the past where gold was used to hedge against US dollar risk, inflation and other things, people are now turning to Bitcoin. So they mentioned that there's been a dramatic divergence between gold, silver, and Bitcoin. So typically they move sort of in concert with each other, but they haven't recently. So gold's been down 3.6%, silver down 4.4%, but on the other hand, Bitcoin's been up 13.4%. So over the last 6 weeks, it's up over 70%. And they claim it's because investors are starting to see it as a more credible asset to hold. Moving now to seek.com.au, the leading Australian job website with operations in China as well. They have been the subject of a short seller in recent weeks. They've come out saying that a lot of the Chinese operations aren't as good as what the company is saying they are, and the sort of content on the Chinese websites full of fake profiles and fake job ads, and that will obviously affect the earnings being reported from it. Now, bad news for the short seller. The company's stock price hit a record high this week on the back of an upped forecast at the company's AGM. So they've expected their net profit to be a lot higher, up from 20 million to 50 million for this coming financial year. So investors have liked that as well. They've announced that they plan to reintroduce a dividend, once again trying to keep the investors happy. So what's on the basis, what's brought this on? Well, basically revenue's higher, so 1.6 billion, EBITDA's 400 million, leading to a net profit of 50 million. So they're saying the revenue is well above the assumptions made at its previous results meeting back in August. Moving to Warren Buffett and Berkshire Hathaway, they've released their holdings for Q3 this week, and it's interesting what's happened. So they bought into all of the gold miners previously. Obviously, Warren saw gold as sort of a hedge when traditionally he's always steered clear of gold. Well, he's reversed a lot of that. He's actually sold down a lot of the gold miners. In addition, he's been buying up in the pharmaceutical businesses. So he's got new investments in Merck and Pfizer. And that Pfizer trade was a good one because it was sort of before the announcement of the success of the phase 3 trials of their coronavirus vaccine. But he's also been buying AbbVie and Bristol Myers Squibb. But he's been cutting stakes in financials. So Wells Fargo, JP Morgan, almost completely exited JP Morgan. Trimmed Apple. Apple's still the biggest investment. His holdings in Apple's worth 114 billion US dollars. So still quite a lot in it there for him. But it is interesting that he's known as a sort of value investor, but Apple is anything but value at the moment. And moving to the markets now, the US expected to open down just a little bit, probably due to increasing fears about sort of lockdowns and the impact of the growing coronavirus numbers in the US and Europe. That's your update for Friday. Have a great day.
This podcast is for investment professionals only and should not be relied upon by private investors. The podcast is provided for informational purposes only and does not constitute financial advice. The values of investments can go up or down, so you may get back less than you initially invest.